Hey, what's up YouTube? FJ Trades here, back again with another video. I had a lot of fun making my last video and I thought I'd make some more. So today we're talking about kind of a touchy subject. Size matters in trading. We're talking about position sizing, guys. I'm going to look at a couple of different suggested position sizing methods for trading options with a few different account sizes. You still have to do your own homework, of course. I'm not a licensed financial advisor. This is just for entertainment. So do your own homework. Just figure out what works best for you, okay? I got a simple cheat sheet here I'm going to show you, and I'll share it in the description too if you want to take it for yourself and make a copy, that sort of thing. Let's get into it, guys, and talk about why size matters. Okay, so we're looking at account value. I have a couple different account values here. I'm going to stick with $5,000 for most of my examples today because I think that is a pretty good base level. I think $2,000 is not really enough to start trading options, and you're just going to have to play a little riskier. And if you're comfortable with that starting out, go for it. But I think, play safe, maybe save up a little bit more. Either way, if you have $2,000 account, do really small plays. You'll know what that means by the end of this video. So we'll just kind of look at $5,000 accounts first. I think 5% size per trade is a solid, conservative, safe way to trade. And what that means is every play you take, you're only playing with 5% of your account size. So for a $5,000 account, that's $250. And a lot of this comes down to your own personal preference and what you're comfortable with. I think that risk size is going to feel different for everybody, but smaller is always better starting out. When you start seeing red, how uncomfortable are you going to be? What size number is really going to freak you out? You don't want to be affected by any one play. And that's why we size so small. So with 5% size per trade, if that went to zero, it would take 20 trades in a row for you to blow your entire account. Here's a simple probability sheet. This is probability of a certain number of consecutive losing trades within a 100 trade sequence. An important part of trading is that you really don't want to be focused on any one trade. You obviously want to employ a system that is successful and has a win rate that is profitable, or you're just throwing money away. You'd like to consider your trades as a series of trades in larger scale. Every 10 trades, look at the way you executed those 10 trades and figure out how you can do better, or 50 trades or 100 trades. Let's just take a look at like a 50% win rate. If you're profiting 50% of the time, that's pretty good. You don't even have to be that high to be profitable, and I'll show you why, but let's just say 50%. And, some of the really great traders get up into the 60, 65, and can even be lower, 35, 40%. It's more about how much you win when you're right and how little you lose when you're wrong than it is about getting this win rate number up. So think about it like that, guys. With a 50% win rate, there is a 95% chance that sometime in a 100 trade sequence, you're going to see 5 losing trades in a row. If you size your plays at 20% of your account size, it takes 5 plays in a row to blow your entire account. If you size your account at 10%, which would take 10 losing trades in a row to blow your account, there's only a 9% chance of you seeing 10 losing trades in a row with a 50% win rate in a 100 trade sequence. Do you see what I'm getting at here, guys? It's just irresponsible to size so large unless you're an elite trader, already a super pro trader, know exactly what you're doing. And I'm a year in, I still don't think I'll ever feel like that. As this win rate goes up, obviously these rates change a little bit, but even at a 70% win rate, there's still a 50% chance you're going to see 4 losing trades in a row, 55%. That's a lot. The chance of seeing 8 losing trades in a row, 1%. So these numbers, use these numbers to your advantage, guys. It is literally impossible to blow an account if you size with 5% plays and have have a decent win rate or decent setup. It's going to feel like you're playing with small numbers, but that's kind of the point, guys. You don't want to be affected by any one trade. If you have 100% of your account in a trade and that thing goes to zero, you're going to feel like crap. So you need to figure out what that number is that you're comfortable with. I suggest go with a smaller number than you think you're comfortable with to begin. And again, never do anything in trading without paper trading a significant amount of time or test trades first. There's just no way to know what it's going to feel like when you're actually trading until you do it. I have some more stop loss examples here. If you're risking 5% of your account per trade, and a 50% stop loss would be, if this whatever contract you theoretically bought at $250, if it drops to $200, you're going to cut it, or $250, you're going to cut it, or $100, you're going to cut it. It just depends on how much you're willing to lose and what your own win rate is, right? So if you have a pretty good win rate and your risk to reward ratio is solid, you can risk a little bit more per trade, right? So let's go ahead and look at our risk and reward ratio here. This is really important. We'll just say 50% is a good example win rate here. If you take a play with this $5,000 account, that's $250 with a 1-to-1 risk to reward ratio with a 50% win rate, you'll break even. Now, I know you're going to want to have a bigger win rate than that, and you're going to want to be profitable and not just break even. Look how much this number jumps when you go from risking 1 for a 2 reward. So risking $1 to make $2. You can win 3 times out of 10 and break even if you're risking $1 to make $2 on your trades. I think somewhere in between here is the sweet spot. You want to keep this ratio under 1, right? This is not realistic. Don't do this. This is not realistic. Don't do it. You're not going to do that. If you can do that, please give me a call and teach me how. So, you'd like that 1 to 1.5. I think that's a 0.6 ratio, right? So, anywhere in that ballpark, and you're going to be a very profitable trader as long as you can find setups and pick winning plays, right? And execute those trades. That's another part of position sizing, guys, is I think it's really key to start with one play at a time. Jumping into my rules section here. Keep 50% of your account in cash all the time. More is better. Less plays is better. Less plays are better. If you can't be profitable finding a good setup, taking one trade at a time, there's absolutely no way you're going to be profitable taking multiple trades at a time. I think a daily goal is important. I have to, reteach myself these rules every day, but the daily goal is really important, and I'll show you why here in a second. Scaling in and out, where once you kind of size up your account some and you can afford multiple contracts, you want to set, take some off at 30% win, take some off at 50% win, that sort of thing. We get into that with a different entries and exits video. Yeah, so like I said, one play at a time. And you basically want to be a robot who knows how much they're risking on each play and takes green when they see it. I'm really good at not doing that and then realizing, oh crap, if I just done that every day, I would have made more money this week than I did. Don't be greedy. Have a plan with every trade, right? So you want to know what level you're buying, what level you're selling that contract if you're taking options contracts, right? And you shouldn't enter a trade without knowing what you're risking and when you're going to sell, because then you're just going to be FOMOing and waiting greedily and watch that thing go to red. So looking at a $5,000 account, I set up this example here. If you can make 3% gains with your $5,000 account per day, that sounds small, doesn't it? I'm going to show you why it's not. So I use this website, thecalculatorsite.com, to help make sure I was getting these numbers right. But basically, if you make 3% per day. It takes, 25 days to get your account to $10,000. Still targeting 3% per day. At 50 days, you're at $21,000. At 100 days, $93,000. 150 days, you're at $408,000. This is hard, guys. This is not easy, but I'm showing you that if you could learn to take the small wins, that's all it takes is patience. At 250 days at 3% return, this is your theoretical number. Good luck actually getting there, right? But this is just showing you the power of being okay with these small wins at first. Now everybody wants to see their GameStop play go to $10 million overnight. That's just not realistic, guys, and it's teaching you bad habits. If you can just stick to your plan of making a daily goal of whatever these numbers are, you need to figure out what you're comfortable with risking, right? Because you could do more than this. I think it's hard to even do this. So, because you're going to have losing days, right? But let's say if you try 2 different plays on one day, $250, and you make, $100 on one and $50 on the other, or you make, $250 on one of them and lose $100 on the other. So you take those wins. Think about this number more than this number, because this number is going to be a lot scarier in these larger account sizes. So if you can just take, here's my daily goal, 3%, $150. Boom. Thank you very much. It's going to feel really small these first couple days, guys. But nobody would turn down this kind of money, okay? Because once you get up to, 60 days in, so, maybe 2.5, 3 months down the road, you're targeting $1,000 a day. Who do you know that wouldn't be happy making $1,000 a day? It's ridiculous. Keep that in mind instead of trying to get rich overnight, guys. This is the move. Be comfortable taking the small wins, okay? Small, consistent wins, and grow these habits of doing the right plays, right? So we'll look at some legit plays from this week that I took that, you could have bought with $250. I did a scalp today. I usually play a little bigger, and this is my smaller account, but I usually play a little bigger on a scalp because I know I'm going to get out of it quickly. And this is risky. This is too big of a contract here. I set a conditional order and let it go, and I thought it was going to buy in the 5 range, but it bought in the 9 range. So I sold a little early and took profit here. So that was, I think I made $360 on that. That's not bad. Definitely hit my goal. So stop trading, right? But if you look at this contract, this is NVIDIA call for 6:30 call for April 16th. This contract was under $4 after 10:45 a.m. And then, you could have got it at $1.64. I should have bought here, guys. This is trust your plays, trust your setups. I just don't like swinging stuff overnight. So I bought here and then sold. Let's look at the 5-minute chart so you can kind of see where I actually sold it. I did not hold this play long at all. I bought it at, right at open because I had a conditionals order set, and sold 10 minutes later. $300 in 10 minutes. No complaints. That's great. Here's my complaint. This thing went to almost at $20. So I could have made $1,100. And I know newer traders, and I feel this way a lot myself. I'm pissed at myself here, right? Like late in the day, you're like, well, why didn't I hold that? Get that out of your head. If you executed this trade, you did the right thing. You're a responsible trader. You took profit when you saw it. You only had one contract. You can't afford runners to scale in and out, right? If I bought 2 contracts at, $9.40, I could have sold one of them at, 18 and then let the other one run, right? Like, you just can't do that with one contract, and that's okay. You'll get there. It takes a couple weeks, but if you execute right and take these smaller wins, you'll earn those bigger wins, right? and you think that's a big one, get ready, because here's another. Here's a Tesla play from Tuesday. This is a 760 call for 416 for tomorrow, right? So this one went kind of haywire on me. I was in the right play. I just got to say, I bought down here on a dip at, this is the contract price, right? So I bought at 325 on Monday, kind of early in the day, because I knew Tesla was going to do some stuff this week. I was right. Okay, we all were. Tuesday it takes off. I sold at 665 on Tuesday. So that's 100%, right? Double my money on that play. Big win. Look where it went. Wednesday morning it was at $26. So I could have made $2,300 from this if I just held it. But if you only have one contract, you have not earned the right to hold it, right? So next time, if I can afford it with my account size, I'd buy 2 of these, sell one right here at 665, and let the other one run. And, you know, I would have been happy taking profit at any of these jumps. But usually with a runner, if it's free, I like to let it go overnight if the trend is still going. And that would have paid because, that hit this hit $29, guys. So that would have been 1,000% gain from $3 to $30. Cool. So that gives you an idea. Like, these are both plays that are in that, I think this was 325, but it did drop down to under $2. And this one was, there was a point where it was at, holy crap. Yeah. $1.40, even less, almost $1.15, right? And it was $9 the next day. So there are plays out there for $250, guys. Don't think that there aren't. These are big tickers. It's just volatility with weekly options. You know, it's risky. These big wins don't happen all the time. I have plenty of losses to go with these, but if you size right, you're not going to feel badly about taking a dumb trade. You're going to be pissed. Shoot, I didn't hit my 3% goal today. You're not going to be pissed. Oh, I lost $2,000 out of my $5,000 account. And then it's going to take me a bunch of days to get back to that 5,000 before I can even think about resetting this track. So, play small, control your risk. Don't give up the goat on a big play, guys. I promise it's not worth it, and you'll be mad at yourself. I get mad at myself every time I do it. So, slow and steady wins the race here. I hope this was helpful. Ramble on account sizing, position sizing, and let me know if there are any questions, and I'll see you in the next video. FJ Trade, stopping out.